Welcome to Team Hoodl. Time, energy, money, emotions. Hold on opportunity for dear life. Team Hoodl. Where we look at stock charts and cryptocurrency charts. We look at the exit and entry points, price patterns, trends, continuations, discontinuations, divergences, harmonic patterns, candlesticks. Okay. It's October 1st after the September sell-off, into the September sell-off. Okay, and we're double bottoming here at the 428 zone on SPY on the S&P 400 index. 500 index. 400, 500. Okay, it's interesting that SPY ran past 432, okay? The S&P 500 index went past 4,302. Okay, and the ETF, this chart and this chart are like the same, basically. This is just the ETF for the S&P 500 index. So you can buy puts, calls, or shares of this right here. Okay, and it's interesting that the S&P, that SPY, it ran past 432, and then it dipped below 432 before running up again past 432 again, and then dipped below 432 again. Okay, now why 432? Well, because 432, okay, all music, popular music that you hear today on the radio, on the TV, on commercials, on records, is tuned to 440 hertz. That means the standard bass tuning of the note A is tuned to 440 hertz, and then all other notes are tuned around it. Well, that gives a disharmonic geometric structure. Okay. And 432 hertz, when you line up all the other notes around 432 hertz, they're more mathematically sound. And I mean, you can just take a look at the picture. I mean, I'm trying to explain it as easily as possible. Like if I were to explain this to a 6-year-old kid, you know, like the music that you listen to today is on the right. You want to be listening to 432, basically, right? Because it looks like this. That's the easiest way to explain it. And it's interesting that SPY, the S&P, this went past 432 already. Dipped below it. Okay, this I highlighted green. Green is 432. It went above it, and now we're below it again. And we're stalling out right here. It's like, dude, it's a freaking magnet. Okay. Now, like technically speaking, this can continue to go lower. This is your daily chart. I mean, we could go all the way down to your 200-day moving average in time if this thing wants to. But we're looking pretty good so far. I mean, we made a double bottom here. But our RSI is, you know, slightly moving higher than this low. So it's a really weak divergence. I mean, short-term divergence from, you know, just this short-term downtrend. Okay, alrighty. So that's your SPY. Let's check in on our Apple. Okay. The golden apple trade. In time, we are confident our price target is going to hit. Our price target is 160. Okay, short term, we entered in some puts here because we expect this to dip down to this level right here. From where we are now, I mean, it's already heading there. To this, there's two Fibonacci extension lines that line up right here. Okay, the red and the green. Okay. So, and then you're also forming what looks to be a bearish harmonic. Okay, the bearish harmonics are on your top. Okay, and then, so what do we have over here? We have a high. I mean, I'm sorry, we have a low and then a lower low. So we have to look at these ones. They're the advanced harmonic patterns. The low and then the lower low. And if we draw your Fibonacci retrace tool, that's what the blue is. If you draw your Fibonacci retrace tool from the most recent high of 157, where it lined up and hit that trinity of Fibonacci extensions that we've been talking about. The trinity of Fibonacci extensions up here, man. Okay, we have this bearish harmonic where it looks like it's about to complete this pattern where it's going to run down here. And psychologically, I mean, that's at 140. So psychologically, we could break 140, dip below it, and then run back up. And then what happens when you get up here, usually, is you're going to see more movements to the downside. So we could see this go down, and then this could be like our consolidating range before we finally make that move to the upside to 160. Okay, the VIX is, it's trying to push up. It's trying to go past that divergence right here to where we ran up and we made a high. And I mean, we already did that. We made a higher high in your RSI, and your oscillators are making a lower low. So this should be continuing to the downside. But this can still go up higher while this doesn't go as high. So like, let's say if it goes up here, your RSI could still run up over here, and it would still be considered bearish, and then we'd see movements to the downside. So this could, I mean, it's not gonna, so far it doesn't look like SPY is bouncing back as fast as it has in previous times. I mean, if you watch, when we're watching, I mean, when these days happen, this happens really fast. Boom. So we're gonna have to watch, you know, the rest of today on SPY, on what SPY is gonna do, so we can see for price continuation on next week. Okay. AMC stock. Oh, no, let's go to ATER. Okay, ATER. ATER stock. Okay. We're waiting. If we enter ATER, we're gonna wait until it dips below here to the 750 level, 770. Okay. Why? Because your most recent price action from 1683 to 1120. If we draw Fibonacci retrace tool, we get the bottom golden range down here, which it dipped, and it bounced off the 141 before going up. So it could go down and complete this bullish harmonic and still be bullish and still be, you know, movements to the upside. So we're holding back on ATER because it's not. We don't see an entry point right here. I mean, we're like double bottom. It went up. I mean, this could be like a reverse cup and handle. You know, can't see that. This could be a reverse cup and handle, like that, before you go back up. So you ATER bag holders, you. Okay, I mean, I don't see anything else with this stock other than it being a short squeeze. I don't. Yeah. Okay, AMC stock, the highly hyped up meme stock of 2021. Reversed from the golden section, and we're forming a bullish harmonic. It bounced off this. It bounced off right here. This can still be bullish if we go down to 88. If we do a deep crab pattern, I mean, it would be like down here. So we would have to see huge downward momentum on AMC for it to go down here before, you know. Yeah, but we're looking strong. I mean, we bounced off right here at 20, at 30. Then yesterday, this was a huge run up. Boom. Okay, we bounced off here, and we're just hanging out at this Fibonacci retrace, this 23.6%. Okay, there's common retrace points. Coinbase stock also showing a bullish harmonic. Looks similar to the AMC bullish harmonic that we had, except that AMC one has a high and a higher high. This one we have a high and a lower high. So this would be just considered a simple harmonic pattern. And if we go back to AMC, this is more of a advanced harmonic pattern. Okay, just according to this handy dandy cheat sheet. Okay. Grow generation. Hanging out nicely, also bouncing off this bullish harmonic, where it can still be valid. Like we said, if it dips down to 20, this bullish harmonic can still be valid. But that would require bigger price movements to the downside, right? Okay. Okay, we don't want to see SPY dip below here. I mean, if we do, this continues to go down, we're most likely going to see a lot lower prices on this asset. That would make sense, though, since Apple has to run down and hit 139. That can make for some bigger movements all across the board. So keep your eye on SPY, on VIX, on Apple. Okay, AMC stock is bouncing off this bullish harmonic, so if we continue to go up, we're going to see higher prices on AMC. Any stocks that you would like talked about on the channel, please comment, subscribe to the channel, give me some likes. I have 1 subscriber, but I have like 30 views on every video, so people are watching, nobody's subscribing. If you follow along, you'd realize that a lot of the stuff I'm saying has been coming true. Okay? So be careful out there. Invest, do your knowledge, do your research. Take everything you say with a grain of salt, and anything you hear me say also. I would never intentionally say anything to steer you the wrong way. However, I don't know everything that there is to know about the stock market and how much data everyone has access to. You know, I know that hedge funds have, there's level 3, level 4 data access. They use to their advantage. They can use that to their advantage. I mean, one example is if you're setting stop losses on your buys, on a long-term outlook on a stock. Let's say, I mean, you're really passionate on a stock, and you want to buy. Let's say you were really passionate on Grow Generation, and you bought at $26, and you set a stop loss at $25. Or, I mean, even $24.50. If you set a stop loss down here, it already filled your stop loss and ran back up. And then you're left wondering, do I enter back in? Or is that it? Is the trade over because it hit my stop loss, so I don't want to lose any more money, but it's going to continue running up? I mean, hedge funds have access. When you set a stop loss, they know where your stop loss is. So they take an average of all the stop losses, and then they can size their short positions correctly to push the stock down to fill your order, therefore giving up your shares. Okay, especially on high-moving momentum stocks. Don't set limit orders. If they're like, you know, let's say you entered in a short squeeze on ATER, and you bought at 850, and it runs up like it did, up to 18. Okay, well now you want to set a stop limit order at like 16, because now it's going way down, right? This is different. That's where I would say you use a stop limit order, or you use your limit exit order, where you would set a limit order up here. You buy here, and you just immediately set a limit order for 90 days out, because you know that this thing is going to short squeeze, and then it gets filled. That can also work against you because hedge funds have access to your limit orders that you set high above, right? So one way to trick them is to, like, you know, set a bunch of weird-ass limit orders and then freaking cancel them. Set orders, cancel them. Set orders, cancel them. Put orders in the system, make them think that you're going to do something, then cancel it immediately. I mean, they think that they can build computers to predict what the entire crowd of human psychology is going to do. Or what you're going to do individually. You know, you can't do that. I mean, humans built the computers. Computers, maybe, you know, smarter in the short run, but in the long run, the human intelligence will prevail. Okay, so critical time in the stock market. So watch for these bullish harmonics. We have the bullish harmonic on coin. We have the bullish harmonic on AMC, where, you know, like some of these can turn into deep crap patterns and still be valid. Where it dips down here, you cause a bunch of panic, and it's still bullish and it's still valid. Or we could be bouncing off right here. That's the thing. You just want to watch. Thank you for watching Team Hoodl. Time, energy, money, emotions. Hold on opportunity for dear life. Subscribe to the channel. Give me some likes. I have 1 subscriber, so we need some more subscribers to get this financial education out there.